All right, well, in this video, I'm going to go over Growgeneration. I haven't done an update on Growgeneration in quite a while. I own Growgeneration in my M1 finance account, and it's about maybe about 2.5% of that portfolio. So not a huge position, but halfway decent sized position nonetheless. And Growgeneration has been under pressure, so you never want to see that in any of your stocks. But in my M1 finance account, that is definitely stocks that I want to be holding on to for at least 5 years, if not 10 years or longer. So I want to position myself in growing companies that are in industries that are projected to grow as well. And that's what I think Growgeneration definitely is. But I'm going to start off with the news, and I think yesterday or the day before yesterday, they came out and they lowered their guidance for not only the fourth quarter, but for the entire fiscal year of 2021. But it says Growgeneration updates the financial view for Q4 and 2021. And if we scroll down here, take a look at the article. It says Growgeneration has revised its financial guidance for the fourth quarter of 2021 and the full year. And, with some of these high valuation companies that are just getting splattered right now, you cannot afford to be coming out and lowering guidance, which Growgeneration did. So that is adding to the decline. But, I want to own the stock for the long haul. So I've been taking advantage of this decline and adding a little bit on this move down. But it says management stated that Growgeneration delivered a triple-digit revenue growth in 2021 despite persistent challenges and an uncertain operating environment. The company suffered unforeseen pressures in the fourth quarter of 2021 stemming from a slowdown in the hydroponics market. And I don't think that they saw that coming. I don't think anybody saw that coming, and I don't think it was really all that substantial anyway, but that's not what you want to see in this business. But they said, considering the above-mentioned factors, Growgeneration now expects annual revenues between $420 million. Yes, 420 million. They probably did that on purpose because, but anyway, between 420 million and 422 million, up from 193 million reported in 2020 previously. But Growgeneration provided revenue guidance for 2021 before ranging between 435 and 440. So you can see they revised it down about 20 million. And like I said before, in this kind of environment where they are slamming high multiple stocks or high valuation stocks, you cannot afford to be coming out and doing that. But I think for all in all, this article was pretty much good news, except for them, lowering that number. But it says same-store sales for the full year are expected to grow at 24.4%. Growgeneration witnessed 63% same-store sales growth in 2020, so that has slowed down a little bit, but it's still growing. It says the adjusted EBITDA for 2021 is expected between 31.5 and 33.5 million, up from 19.2 million reported in 2020, I'm sorry. So things are still on the up and up, but it says for the December quarter, Growgeneration projects revenues in the range of 88 to 90 million, higher than the prior year's quarter of 62 million. But same store sales for the fourth quarter are expected to decline 12.3% against a 58% growth in the prior quarter. So that, of course, is not good. Hopefully they can get that number up. It says Growgeneration expects to incur an adjusted EBITDA loss of 2 to 4 million for the October-December months. Now, Growgeneration has been adding a lot of stores and making some acquisitions. They're sacrificing some of the current numbers in order to have numbers in the future look even better. But, and that's something that I want to see in a stock that I am investing in for the long term. I don't mind them sacrificing some current numbers in order to increase future growth. But it says in 2021, Growgeneration added 24 new stores, bringing the current tally to 62 stores across 13 states. And Growgeneration is scheduled to open a 6th Oklahoma location in the first quarter of 2022. So I don't know the exact total. I'll have to look into that a little bit later and see the exact total stores they plan on opening in 2022. Just to get a feel for that number. But it says, recently, Growgeneration acquired all the assets of the mobile shelving manufacturing and warehouse facility in for Mobile Media Incorporated, and MMI Agriculture for a combined cash and stock deal of $9.4 million. The buyout supports GrowGeneration's focus on expanding its indoor vertical farming solutions, which will help drive revenues over the long term. It says GrowGeneration is poised to deliver improved revenue and EBITDA growth in 2022, driven by its consistent focus on energies and investments in the greenfield stores, distribution capabilities, business technology, private and proprietary brands, as well as integration of the e-commerce distribution channel. So I think this is going to be a good year for GrowGeneration. The numbers might not be superb at the end of this year because they're doing so much expansion, but I think that's going to pay dividends in the years to come. And if you look at this price performance chart, this thing looks pretty bad, but it says in the past year, GrowGeneration shares have lost 80% against the industry's rally of 22.5%. But I think that's a little misleading because GrowGeneration is tied to the cannabis sector, and the cannabis sector has been under heavy pressure as well. So I think GrowGeneration has a little bit of that double whammy going on. But as you can see, the growth numbers for GrowGeneration are still looking really good. So as far as I'm concerned, for a long-term investment, I am not worried at all. I'm adding more shares on this pullback. And, you know what, let's jump over to Seeking Alpha and just take a look at their current numbers just to see how they are looking. Okay, so now we're on Seeking Alpha's GrowGeneration page. Let's take a look at some of these numbers. Most important number, of course, is this one right here, 909. Yikes! This thing has really fallen from grace. I made a little bit of a purchase today with my M1 account, and I think I got the shares at about $9.55. So it's fallen all the way. It's fallen substantially just from my purchase today. This thing is about to break into the 8s. But when you have a share price that has fallen this far, you can look at the forward PE, and that has come all the way down to 41. So that is a good thing. Still a little bit high in my opinion, but the market cap has fallen all the way down to 663, and that was in the billions. I was thinking that was probably a little bit too spendy for GrowGeneration at this point. But let's scroll down and look at some of the other numbers. And you can see the revenue projections, you know, they were just projected to explode over the coming years. And that's why you get, you know, a stock price that just goes bananas sometimes. So much enthusiasm comes into the stock when it's projected to grow that much. Plus, you know, the cannabis sector was kind of on fire back when this one started running. So, you know, when stocks have this much enthusiasm, they tend to get overstretched to the upside, which definitely happened with GrowGeneration. But now, since the market is smashing stocks that have high valuations, this thing is getting oversold to the downside. So in my opinion, we're starting to get into some pretty decent valuations right now. If GrowGeneration falls down into the $5 range, it's going to be, you know, very hard to not load up the boat on GrowGeneration. I own this in my M1 account. I don't own it in my other accounts. If it falls down to the $5 range, it's probably going to be too tempting to pass up not putting it in some of my other investing accounts. But let's scroll down to the earnings estimates, and we can see the earnings is supposed to go from 24 cents actually down to 21 cents and then back up to 53 cents by 2023. But we can see sales is projected to increase the entire time. In fact, it goes from 428 million to 624 million 2 years later. So about a 50% increase in the earnings. And if we take a look at their capital situation, their capital structure, we can see they have 93 million in cash and 37 million in debt. So they can pay off all their debt with their cash. So that is always a good thing. And if we take a look at the ownership, we can see institutions own about 44%. That is a good sign. Insiders own a little more than 4.5%. I'd like to see it a little bit higher than that, but that is not bad. And then the public and firms sit on the rest of the shares, about 50% of them. So, you know, I think the numbers still look really good for GrowGeneration for the most part. We're just kind of in an environment where higher valuation stocks, you know, they're just getting creamed. But if Growgeneration, drops down, like I said, to around the $5 range, it's going to be hard to not buy a ton of shares, because there's still a lot of growth projected ahead for this company, and they're in an industry that is also projected to grow substantially for the rest of the decade. And those are the type of companies that I want to be positioned in. So if this thing comes down anymore, I don't think I'm going to pass up the opportunity loading up on Growgeneration. But let's get into the charts. All right, so let's get into this chart for Growgeneration. Before I get started, I just want to let you guys all know I am not a financial advisor. Any forecasts or price predictions I put in this video is just my opinion. Please make all of your own trading decisions. Now, I do actually have a Patreon group, and if you do want to know what we are buying and selling, and if you'd like to join our small trading community, we'd love to have you. The link is down there in the description. It is only $10 a month, and after I go over Growgeneration, I'm going to get into the trades that I made today. But looking at this daily chart of Growgeneration, all I can say is, oh well, the mighty have fallen. And wow, I never expected Growgeneration to fall below $10 a share. I expected this thing to pull back because it was overvalued. But like I was saying before, these things can get stretched to the downside, just like they can to the upside. Now, Growgeneration came on my radar right here when this thing exploded past $10 a share. It was actually on that day. I remember looking at it when it came up on my screener, stocks that are up big on big volume, and I was looking at this thing breaking out, started looking into the stock. I saw, some of the projections that were ahead, the growth in sales that were projected to happen with this company. So I waited patiently for a pullback, and I got in on that first, I think I added it to my M1 account right around 13 and change or so. So I only put a 1% allocation in my M1 finance account. So I accumulated some right here, and then the stock started to take off. As it was running, I was not accumulating anymore. I left my allocation at 1%. So it wasn't a huge position in my portfolio, but it did go up, 5 or 6 times from where I bought it. But unfortunately, this sucker has rolled over. I had that death cross right here in August of last year, and it's just been fading ever since. I have since raised my allocation to 2% on my M1 account, so it's been accumulating some more down here. I think my average cost is in the low teens. It started accumulating a little bit above 13 as it was going up until it reached that 1% threshold. I think my average cost might have been around 15 or 16, but now I got it back to under $13 a share. I think it's right around $11 or $12 a share. But if I had to guess what was going to happen going forward, I'm expecting Growgeneration to start carving out a bottom and then moving sideways. After you have a huge down move like this, that you've been in a long downtrend, the chances are pretty slim that you get a pretty fast reversal and start moving up quickly, because everybody right here is kind of a bag holder, and any upward movement in the stock, it's going to be very tempting for anybody who owns up here to want to sell into that. And that's why you need these bases to form after a long up move, because you do have that collection of people that bought at higher prices, and they're probably thinking, what, this thing gets anywhere near where I bought in, I would love to get out, or at least recoup some of my money. And that's that's just the psychology why bases have to happen before a stock takes off. But actually, let's go back in time real quick here. But you can see the base that Growgeneration formed before we had this huge up move right here. Let me go back here. You can see we had this big spike in 2018 when some of the cannabis stocks got super hot. Then they pulled back and came down, and you saw how long it had to move sideways in order for it to form a base for it to get going again. You see all these subsequent moves up got sold into. This was a pretty decent move up here, sold into. This one looked like it was starting to get going, got sold into again, but this happened because of the COVID collapse. But once that was over, it looked like all the selling was done. Pretty much everybody who had bought during this big spike right here had probably trickled out of this out of this company most likely, and then Growgeneration had the ability to go on its run. I think that's probably going to have to happen again. Now, I don't mind if that happens, because if this stock can continue to move sideways under $10 a share, I will continue to accumulate shares of Growgeneration. And if they can continue to grow sales once a long enough base has been formed, I think this one has a great shot of going on another big run. But those are my thoughts on Growgeneration. Sorry if you guys are holding this stock and you're hoping this thing is going to bounce back up to $50 a share. That's just not what I think is going to happen. Now, believe me, hopefully I'm wrong. I don't mind, having this thing bounce right back up to 50 right now and take off, because like I said, I've been accumulating some over the past couple of weeks and gotten to be a little bit bigger position in my M1 account. But those are my thoughts on Growgeneration. Let's get into the trades that I made today. All right, so let's get into my trading activity for the day. I actually made 2 trades. I made a day trade in this one right here, MLCO, and I started a swing trade in CBSH. But let's get into the day trade first. This one is my gap up day trading strategy, and I actually traded this one on the 2-minute chart. So if we back this thing out, let me situate this chart just a little bit better. MLCO gapped up. It ran for a few minutes, which I like to see, and then it started to pull back. Once the stock starts to pull back, I like to wait for it to form a little bit of a rounded bottom or a little bit of a base, and then wait for it to potentially break out. So this was the area that I was looking at as it pulled back. Let me see if I can put that there a little better. There we go. But this was the ceiling that I was looking at once it pulled back towards that moving average, and I got stopped in on this breakout right here. I was stopped in at $10.77. It actually pulled back right after it stopped me in, but it continued to move sideways, broke above it again, and then started to run a little bit. And I actually sold out at $10.99. This wasn't a fast mover, so I got out rather quickly. I didn't know how far I was going to end up going up before it rolled over. So it wasn't the biggest gain in the world, but I just want to get the meat and potatoes of the breakout without putting too much of the trend at risk. If I walk it forward a little bit, we can see if I would have gotten extremely fortunate, I probably could have rode this thing up to about 11.15, 11.16 or so. It says the high for the day was 11.18, so I could have squeezed out about another 2% out of it if I would have held on and got lucky enough to get out at the high, but it was pretty close. And if I walk this all the way forward, the trading day isn't over yet. You can see if I was still holding on to it, I guess I would be up a tiny bit, but I would be not as high as it was where I sold it. But all I'm looking for is a quick day trade on these type of trades. Just try to earn a little income, daily income to put in the coffers so I can buy some other stocks. But let's go back to the daily chart and let's take a look at that other trade I got stopped into, which was CBSH. And we can see CBSH is breaking out. I put in an order to buy it at 73.73. So let's go to that 15-minute chart. I'm going to put it right about there is the area I was looking at. So on a break of that is where I wanted to get in. It actually stopped me in real quick. It pulled back a little bit, but now it looks like it's starting to move in my direction. I plan on holding on to this one for a couple of days if it works out. I'm going to place that stop pretty close right below this candle that it's making today. So I'm not going to risk a whole lot of it on it, but there is this resistance area right here. That's what I am worried about. And if it gets up there to around $77, $78 a share, I don't know, call it 77.25, I'll probably end up taking at least some profits off the table, depending on how strong it is. I'm guessing it's probably not going to move into it too fast. So if it kind of limps into that resistance area, I'll probably end up taking all of it. If it ends up screaming into that resistance area, I probably might just take a little bit off the table and wait and see if it can push a little bit further, because this one is in one of the strongest sectors that are in the market right now. This is in the banking sector, and if we look at the banking, you look at the XLF, which is the banking ETF. Oh, it's actually pulling back a little bit today. Oh, well, but it has been one of these stronger sectors. With my stock that was breaking out, I was assuming that it was probably still performing well today. Oh, well, I think, I think maybe JP Morgan came out with bad results. That's probably, yeah, that is probably what is dragging it. But I think Wells Fargo came out with good results. So Wells Fargo is doing pretty good. Let me see, Bank of America. Now, Bank of America is rolling over as well. So I think this is mainly on the JP Morgan news. So I'll have to keep a sharp eye on that, because if more banking stocks start reporting substandard earnings, this could get a little hairy. I might have to take profits a little bit quicker on that if I still have it. But XLF has been one of the strongest sector. Another one is XLE. XLE is continuing its strength. I took a position in Occidental a couple of days ago. I took some profit at the table at $35.25, but we can see that Occidental is still holding up rather nicely. You know, I figured it was going to have some trouble getting above this resistance. Hopefully, it can blast through that in the next couple of trading days or so. But another stock that I hold in my M1 account is CNQ. And this one has been absolutely screaming. I added this one to my M1 account just a few months ago. I bought it on this breakout right here, but as you can see, CNQ pulled back right away, started drifting lower, but I was adding to it the whole time. And actually, when it came down to the support area that I had drawn on the chart, I added a little bit more on this day, added a little bit extra, and you can see that CNQ is really exploding. I think financials and energy are going to be two of the stronger sectors going forward in a high inflation economy. Financials and rising interest rate environment. Financials and energy, you know, they tend to do pretty good in those. So those are the sectors that I'll probably be looking to make some trades in. But MLCO and CBSH were the only trades that I made today. Well, that's all I have for this one, everybody. If you have any questions, please leave them for me down there in the comment section. I'll get to them as soon as I can. Thank you so much for watching my video all the way to the end, and until next time, take care, everybody.